A fellow Evans. Hey, Sergio. Thanks, man. Clayton, Cliff, welcome, Daniel, Blurry, there you are. Angel, Jorge, Vince, Jackson, Ethos. Right on. All right, everybody coming in now. Let's build it up a little bit and then let's get started. Are we going to talk about GME? Yes, we are. You're like, because if we are, then I'm out of here. All right, well, let's start. So today started off fairly, worrisome, actually. It was going down the market. I wasn't worried, though, but, caused a bit of worry in people. And then started to turn around. The VIX was going up, went up to 25, and we ended the day at 21.25. But as you can see, like from yesterday, if you remember from class yesterday, we had that bottoming tail candle. That's very bullish. And what did I tell you? I say we can't do the same thing again. If the market drops, everybody's going to know that this is a buying opportunity. It's too obvious. So, but yet the market makers let the market drop, and was the wrong move. It got bought up pretty fast. Let's take a look at the intraday chart to get a little bit of a better idea for how it went. Yeah, so it was pretty sideways for the first part of the day, and after coming from yesterday, which was pretty thrashing and dangerous, no one really had the conviction to just go for it, and so all the momentum stocks, all the small caps, mid caps, big caps, everything, just nothing was pushing. Everything was going sideways, and as far as the small caps go, there was just no momentum, and it stayed that way. A couple things grinded up, and we started to notice some things coming on our radar. And one of those was GME, and GME went up to, I believe it was, let's take a look at GME. So in any event, the market did eventually start to put in a very good day and ended really solid, and it's still not up and over the high of the year. However, it is really close, and let's take a look at that on a 10-hour basis. Let's see, 10-minute basis, 15-day, 10-minute basis. There, you can see this is the high of the year, a high of the all-time high, 396 essentially. And here's where we are. So we went right into all these pivotal congestion points right here at 392 and hit resistance, but pushed right through it. So if tomorrow can continue that and even perhaps come back, back test and bounce off all of that resistance and turn that resistance into support, then we're going to be breaking all-time highs again. So it definitely was a great idea to buy up your favorite stocks that were holding and showing strength during that dip yesterday, because it's looking like we're coming out of this pretty strong, pretty remarkable how that worked out. Let's take a look at Tesla, for example. Tesla was hanging out around 790 for a while, 800, 810, etc., and then went all the way down to 620 down here, way down there. If you had gotten it down there, that would have been absolutely excellent. And now we're at 740, and 620 is just a dream. So I do know some people who snatched up some Tesla down there, some other people who snatched up this or that. We got some Apple down in there, and some more of the ARCs. We doubled down on some of the ARCs. We're doing really good on our swing positions. So today we had a situation with GME. We were watching it, and I noticed it forming an ABCD pattern, which was, at this point, it's going to be hard to spot without me manipulating the chart a little bit so that we can go back and look at how it looked when I noticed it. Let's take a look, because now it's astronomical. It's in a whole nother, like they say, gone to the moon. It's in a whole nother stratosphere. All right. Okay, so right around here, this is when GME piqued my interest. This looked like a perfect ABCD setup. And so what do I mean by an ABCD setup? That's where you have the price rally to a high, and then it pulls back. Something it's best if it's further than, it's better, less than a 50% retracement. Okay, so 50% retracement would have been right around there. In this case, that was the case. And then pushes back up over VWAP, so it becomes almost a VWAP test. That's what this dotted blue line is right here. Pushes up over VWAP, and by the way, that level that it formed right there, that's the B. If I can make a B. And then it forms this top to break out of, which is the C level. And then you have A, which was the top. So this is the ABCD pattern. So you got to be asking, okay, where's the D? What is the significance of this? What's the pattern? How does this work? Well, the D is that price after it chops around in this range for a while, and you just start accumulating shares, eventually breaks C, runs up to A, take little profits along the way, tests A, and then breaks out and runs way up to D. So D is way off, and we didn't really know how high D would be. First early predictions was maybe 54. On a natural stock, that would have been correct. So what you do is you start accumulating, and when it starts to pull back towards that B level, you buy more. And if it pulls back more, you buy more. And so that's what we did. We started getting in around 48, accumulating at 48. And I'm instructing everyone, okay, start accumulating all in here on the pullbacks, 48. And what you're going to do is you're going to get rid of 25%. First of all, you're going to double up when it breaks C. So when it breaks this level 49, you double up from wherever you are, just double up once it breaks C. Then you're going to take off 25% on the way to A, and then another 25% at A. Now you leave the rest, that other half of your position, for the rest of the day and into after hours. And that's how you play that. But we had this stock really go crazy on us. So anyway, we're buying all through here, and then there it is. There's the little breakout, and it hung out there for a while. And once it hit 49.75, we took that, by the way, right here, we doubled up at 49, doubled up our position. And at 49.75, it started to happen really fast. Let's go back here. There we go. It happened really fast. Right here, we took that 25% profits. And then at 50, it just happened so fast. We took the other 25%. Now we're holding half a position for the rest of the day. And the idea is to take out 10% every time it gets up there and starts to pull back. And typically, that takes all day. It's not instant like it was here. And since this was showing a lot of instant movement, you basically have to say to yourself, okay, well, maybe we're going to get what we would have got all the way through after hours now. So we started taking off a little bit there at 52, at 53, at 54. And at that point, some of us were still holding, and they'd be holding all day. Some of us still have it in after hours. But at that point, I was all out. And so then I started taking the breakouts, and some of our members started taking the breakouts. So from every time it broke 50, one of these even numbers, we got in and then got out right beneath the next even number, round number rather. So 54, 55, and it just kept going. Look at that. Every time it broke a new round number, it just kept going. And at this point, you can't even really see where we were. We were down here at 48. And then the market closed. It actually halted in the final minutes of the day, pretty much unfairly, because what happened is it trapped people. Some people maybe didn't want to hold into after hours. Some people maybe didn't. Maybe they wanted to take their profits or lighten their position up, take some profits, take 10% of their position off just for some extra padding. But yeah, right around here, towards the end of the day, it halted and it left people hanging for about 13 minutes. It was really an unfair halt. I don't know what they were doing. That is not a typical halt. Somebody says, what are you talking about? GME, GameStop. And then the market closed, bing, 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 and immediately it unhalts and drops very quickly down to 80, and then held and then kept pushing. So the rest of the day in after hours is fantastic. If you made it to after hours, you were looking really good. No problem there. But yeah, we did really well on GME today. That was pretty amazing. Outstanding play. And you made $5,700 today on this. Fantastic. Woohoo. Nice. So, yeah, now that brings us to the part of the program where if you have any questions, go ahead. Or if you want me to take a look at any stocks, or if you have any questions about that particular play, the ABCD play, and how we spot those every day. I mean, we were watching 40, 50 stocks. None of them, not a single one of them had an ABCD pattern forming. Actually, there was another one, AIXT, I believe it was. But other than that, GME was the only one. So because it put in that pattern, we made sure to start accumulating shares early on because we could see this had potential. Somebody asked, how about AMC? So AMC is not really going to be the same way because AMC doesn't have a low float like GME does. So AMC has a lot of bullying. So people are trying to bully it up. So yeah, it'll move because of that, but it's not going to move like GME is going to move. So here it is in after hours at 11. And basically the only reason it's moving is in sympathy with GME. You can actually see the ABCD pattern on AMC right there, but it was below VWAP, so it was quite weak. Didn't really happen until the end of the day compared to GME, which started pushing much earlier. And then cost was the other one that I was looking at, because cost is a bit of a lower float like GME, but it didn't really move as much. Of course, it did move some, but it didn't move as much like GME did. But look at that there, 20 to 33. And then back here earlier in the day, if you could have been accumulating shares, 13 to 20. Nice. Not the same as 48 to 180 on GME. Actually, it hit 200, I think, on GME and after hours. But still, yeah, we will, of course, have those on the radar tomorrow morning for live day trading. Absolutely. We'll be watching those and others. And that's how I found GME. That's how I saw it, creating the pattern, because I was already watching it. I've been watching it, been waiting for this day for it to really pop. No, you don't. Yeah, I don't use the Fibonacci tool to take profits. That's just too ethereal and arbitrary with the Fibonacci tool. It's supply and demand. You just got to watch it. Here, let's take a look at it. Where to take profits. So there's key psychological levels. So that's the first thing to be dealing with. And that's how we knew where to get in and get out every time. It's kind of hard to see, but it's pretty phenomenal how that works. Let me see if I can zoom up and really illustrate how accurate key psychological levels are. So look right here, there in this range, there was not a single trade above 49.00. And the reason is not because nobody wanted to trade at 49.05 or 49.10 or 49 even '02 or '01. It's because at 49.00, so many people had stop orders to sell orders already input there. So it acts as this huge wall. And that happens at all key numbers, like 49.5 and then 50 and then 50.5. So, my trading strategy is built around that. So I buy when things break those key levels, right? Because it broke through. It had the momentum to break through. So like 49.49, when it hits 49.01, I'm in. And then where's the next key psychological level? 49.5 what? 49.50. So should I be selling there? No, because it's going to be rejecting. There's too many orders already clogged up there. You sell at 49.49 in this case, 49.49, 1 penny before that, or 45, whatever you can get in that right up there as it's slamming up against the top, and you just get all out. Then you get back in when it hits 49.51. So let's take a look at how that looked price action wise. We'll talk about puts in a minute on that. All right, so there it is, hitting 49.5. Can't get past it. Not 49.51, 49.5. So if you were taking 49, you'd be running it all the way up to 49.49, your order. And then you'd be selling. And once you're out, you've got all your money ready to go again. You got in at 49, you got out at 49.49. So you made a profit of 1%. And then you have all your money back again, plus your profits, and you get in again at 49.51. You just got to wait for that moment for it to break. There it hits 49.5 again. See that? And there's the break coming right there. So you get in, and then where's the next out? 49.99, right? Because the next resistance is going to be 50. And there it is, 50. And it was really fast within 60 seconds. These are 1 minute bars. Within 60 seconds, it hit 50, found a little bit of resistance, took 30 seconds for it to start to pull back. I had sold everything, and then I was ready to get back in at 50.01 for the next ride up to 50.5. And this is when I noticed the volume started to go into hyperdrive. Look at all the volume down there. And so that's when I knew I could switch from taking out at 0.5s and just hold through the thrusts to each whole number, even just watching it closely to see if it pushed into multiple whole numbers. And every time that it starts to pull back and hit a resistance, and you can see those barriers on the level 2. You see huge amounts of orders on the sell side. They're like in your way. And so you just sell, you just get out, and because that's a blockade and that things are going to pull back again before they hit. It's almost like a what do they call that? A battering ram. Is that the term? It's like a battering ram. It's got to hit it enough times, and it's not. And every time it's got to go back. So you sell every time it hits, and then you get out, and then you wait, and you wait for the door to break so we can get through some higher levels. And that's how you play that. You don't play the pullbacks, you play the breakouts. And we were able to get all the way to the market close And some people held into after hours by doing that method. Okay, now somebody asks, would buying puts for GME at 50 strike price be a good play for March 19? Not really, no, because the implied volatility now is going to be huge. So in other words, you're going to pay as much as you would make in intrinsic return value on a drop like that. You're going to pay an equal amount because the people selling the options now, which can be you can sell these options if you want. They're already figuring out, okay, so based on this gigantic move, it could come back, just as fast. And so therefore I need to charge X amount for this option. And so yeah, it's not profitable to trade options after an event has happened. You make money before the event has happened. And then the volatility explodes, the move happens, and you make a lot of money. Now, if you try to get in now, the expected move is what it's called. The potential expected moves, both down and up, are calculated into the price and the cost of the option. So it becomes not profitable anymore. But if you wanted to make money on it going down without having to pay any extra money, like I just said, you'd have to short it. But unfortunately, this is short sale. This is a short sale restricted stock, and so you'd have to pay a lot of money as a fee just to even hold short shares, even for one day, like 25% to 50%. So it just again doesn't make sense. So unfortunately, no, you're not gonna be able to play the downside on that too good. It's too late. However, let's say it goes way up and it stays up there for a week. Now people are the options, contract writers are starting to price in that, hey, maybe this thing's kind of staying. So now that it starts to get cheaper, it starts to deflate, but it doesn't deflate a lot, but it'll deflate a little. Instead of 1,000% IV, maybe you'll have to pay 700% IV. It's still going to probably be not profitable. But at that point, if you happen to predict, if you happen to get in right before the move moves, that's going to be the most profitable entry, and that's going to be impossible to time. So again, it's not profitable. So if you analyze it from every angle, there's really no one who can make money in puts or calls when something has already exploded like that, except the people writing the contracts. So you go and you gamble by buying them, but you pretty much break even or lose money, or you take a ton of risk compared to them. And so it's not a good idea. Somebody asked, do I think if GME has more room to go up? Yeah, let's take a look at it on the daily chart to compare it to last time. And this will maybe help put it in perspective. Here we are now. Here's where GME has been before when it's done something like that. Okay. Will we get that again? No, because there's like so much regulation and red tape holding us down and freaking, it's just unfair regulation for traders on that particular stock. So no, we're not going to be going up there again. But tomorrow could go up. Pre-market trading starts early, so that whole move could be done by the time the market opens. It could go from in after hours. Where is it now? Like 170. Actually, it's way up here in after hours. By the way, it's more like right here. It could go from 170 to 280 in pre-market before you even start trading it. At like 5 a.m., 6 a.m. Could be hitting 300 already, and then start to sell off and be all the way back down to 90 by the time the market opens. So, it just depends on how much you want that trade, how much you want that money, and if you're really serious about it, you'd have the right accounts where you could trade pre-market like that. You'd have a good alarm clock. you'd get some sleep tonight, and you'd go for it in the morning. All right, so what stocks would you like me to take a look at? Somebody says Palantir, and why? You have to say what stock and why, and that's when I'll take a look. Real for a swing after earnings. So, all right, let's see. NFR4, how do you get the right account? Well, what I mean by that, Kate Heaton, is some platforms like Robinhood, for instance, only allows you to start trading 30 minutes before the market opens. Webull, I think, lets you start trading around 4 a.m. TD Ameritrade, 6 a.m. So, everybody has a different time where they start allowing you to trade in the pre-market. So that's what I mean by that. If you're already prepared with the right account. All right, Palantir, potential bull flag forming on what time frame? Subi. Well, I'll pull it up. Anyway, Real, you asked after earnings came out, it's now at 27. And you said, how about a swing trade after earnings? I don't know. I'm not really seeing a whole bunch of potential there. Maybe you love that company. But I'm not necessarily seeing an entry now at 27-ish. Perhaps down here when it hit this the other day, when it hit this 50 moving average. All right. Palantir. 1 hour. Okay, thank you. The 1 hour. Let's take a look at that. Not quite sure how you see that as a bull flag. Did you say bull flag or a bear flag? Bull flag. I'm not seeing that bull flag. No, I'm not really seeing that as a bull flag. What we have here is a bear flag. I don't know. It depends on, I guess it depends on the perspective of how you're looking at it. Why is the thing focusing like crazy? Do you see that? Whoa. I don't know why that's doing that, guys. Sorry. Okay. There. We have that. But that's a bear flag. It's going to break down. Yeah, I'm not too hot on Palantir, gotta say, guys. But it's holding sideways, so that's good. That was crazy, right? He said it looks like a horror show. Do you need a special account on Webull? I have my GME on there. No, I don't think so. All right, from the Zoom, I have some AMC shares. Would selling covered calls on those be a good play? No, not really, because it's so unpredictable right now. When you want to start selling you want to sell calls on something that's predictable. So let's take a look at something on the daily time frame, and I'll show you what I'm talking about. We're going to go over to our good buddy Crocs. So you see how predictable that is? Now, if you were to buy shares every time it pulled back to the bottom end like that of a channel, you could sell calls up at what would be the top end of that channel. And you know that by expiration, they would expire worthless if you pick the right number. And you can do that weekly or monthly, depending. You could also sell puts as it goes up. So you can create a bull put spread. So you can sell puts because it's not going to go down. So you can make money on both sides that way. Plug has earnings pre-market, looking for entry, and if it pops, an estimate going to slap me for this one, I feel. Let's see. All right, so yeah, Plug has been kind of crapping out as of late, but recovered with the market, and I think FCell and others are probably in the same situation. Hmm. By the way, real quickly, somebody asked, what about Nokia and Blackberry and EXPR? Do I think they're going to fly? And the answer is big no, because their float is so big. It's so big that you could put all of the money that's going into GME into them, and they wouldn't even move hardly at all compared to the others. And that's the same problem with AMC. AMC has 7 times the float as GME. Last time I looked, I'm using my memory. I might be off on that, but it has a much bigger float. And but costs is in a similar situation as GME. Yeah. So anyway, plug. What do I think from here? It's in a downtrend. See, so it was going up, boom, bump, and then when it broke this pivot point here, game over, downtrend. So even if it goes up a smidge, that'd just be a pullback, and it's going to keep going down. Probably won't settle in until about 30, 31, maybe 29. Looking for entries. I don't know. When a green candle breaks over a red candle high. So in case the earnings are good, look for that. Probably my message got lost above. I'd love it if we can take a look at Workhorse. Kathy Wood bought today, up 15% in after hours, sitting close to bottoms after yesterday's bloodbath. Okay, let me take a quick look at that, and then we're going to also look at that at the end of the class tonight, because it might be a potential play tomorrow. Workhorse. Wow. Yeah. So that was because it lost the contract. Right. And she felt that was still a good value, I guess. And now it is up at 17.53 in after hours, which is right around here. Well, I mean, this huge breakdown right here is not good. Like I said last night, I believe that now that the USPS contract is out of the picture, then it's going to return to pre-USPS hype value. So when the USPS contract news started, go back, find that news report, see where it was, see what that did to the stock, see where it was before that rumor and news and hype started, right? That's now what Workhorse is worth. Kelly said $5. Thank you, man. All right. So, Workhorse is worth $5. Sahil. Okay. Griffin Palantir, I think is IUI in business with 3-minute. Now not sure. Well, I'm not sure what you meant by that. Trying to find an entry for Crocs for a swing trade. You said earlier today to Kelly, I think 76 would be a good entry. Can you explain what type of option you would choose looking back at the trend? Well, number one, when I pick options for swing trades, I go 75 delta. So between 0.6 and 0.8 delta, ideally 75 delta. It doesn't have to be exactly 75. I'll pick 66 sometimes, 68, 72, 78, 80, even 50, 58. So, but you just have to know that the ideal is 75. That's what you're looking for, and then you want to pick the one that's the most liquid around there. So that will get you the right strike. And then as far as expiration goes, you have to say, okay, if at any time I pick up Crocs at the bottom end of a pullback, how long at worst does it take for it to appreciate to the maximum end of the channel? So that's what you find. So you look, you get in down here. It only took like 1 day. It pulled back right here, and it took 2 weeks is what that was. Did it again, like a week and a quarter. Did it again, took like a week and a quarter. Did it again, pulled back. Needed about a month on that one. And so what I recommend is you always get 3 times the duration of the expected move. So in this case, the average is about 3 weeks, it seems. So you need about 9 weeks of time. to be safe. So 9 weeks, so 3x duration and 75 delta. So you need 9 weeks. That's a month. Let's see. That's about 2.5 months, something like that. But 9 weeks is perfect. And 75 delta. And then I'll tell you which strike to grab. It's not going to be cheap. It might be like $800. But a lot of that is in the money value because you're getting the 75 delta. And when the stock goes up, you're going to be making more money than somebody who bought an at the money option or an out of the money option. And then when the stock goes down, your option will retain some value because you have 9 weeks of time rental fee left on it. So even though the price went down, it still has rental fee value, so that you can trade it back into the market for a lesser loss. So the time helps pad the losses, in addition to giving you some insurance on the time and expected move. And then the strike helps get you a better delta, which gives you more return per dollar move in the underlying. So you make more money on the other side. So you're going to make more money and you're going to lose less money. So that's it. I have that written down. So price is irrelevant. The delta value is most important. The delta will get you the strike. Yeah. The delta will tell you which strike to get. And in that case, when you're picking the strike, you want to pick the one that's most liquid. It's usually the round number. So, it might be 70 as opposed to 71 or 69, or certainly if it's like 68.5, it'll probably be more liquid at 70. You know what I'm saying? All right. How do you look at the float? You can look that up like on FinViz, but a lot of different firms have differing value. They can be widely differing. So it's really hard to know which number to believe. But FinViz seems to be pretty accurate. So check out finviz.com and you'll be able to find the float information on any stock. And the float means how many shares people haven't bought yet. So it's like available number of shares, sort of the open liquidity of a stock. And the people who have bought it, they're either going to hold it, so they're not going to trade it back, or they're less likely to trade it back. So really the float is what moves the stock, whatever float is remaining. I use Robinhood for my options. Does anyone know how to see the delta on Robinhood prior to buying the option? You can do it. I just don't remember how you do it, but you can do it. You know how when you can see all the different options you can choose from, it's not there. You have to go, I believe, into the option. You have to choose one. So it's stupid because you want to compare the deltas of the different ones so you can decide which one to choose, but they don't have it set up that way. So I think you have to go into one option, and then I do believe somewhere in preferences, or maybe there's some 3 dots there or whatever, you got to choose the Greeks, or it might be a different page for that option. And then it shows you the Greeks. And you can go, okay, that's not it. Then you go back and you choose a different option. So it's kind of a pain in the ass, but yeah. Sergio says, choose one and click the green arrow. There you go. Square, is it a buy the dip opportunity? Let's take a look. Yeah, it is. It really is. It looks pretty close. Let's draw a channel on that. Let's see what we got. Pretty much right about there is the mass coincident line, meaning that's the line that touches through all the most logical places. And then these kinds of moves, when beginners start drawing, when novices or whatever you want to call it start drawing lines on charts, they tend to draw it like this. They try to get it right to the end of the wick, so the 2 bottoms right there. No, that's not correct, because these were unusual moves. You really want to just draw in what you can expect, and then these unexpected outliers is what they are. They're part of the the statistical curve. There are these moves on the outliers of statistics. And so you don't really count those. You let those just be like the second and third standard deviation type moves. Then what you do is you draw a parallel line, which does the same thing. It tends to hit all of the top end of everything. So it takes a little bit of an eye. It's got to be A, number one, a parallel to the other line, and then B, simultaneously intersecting basically all of the natural other side peaks of that. So I can kind of see that with my eye. I'm probably not perfect at it, but this was pretty darn good. You get good at it. And you can see here, then it also gave some better gains a couple times. Again, you can't expect that. So you need to sell like 80% of your position when it hits the other side like there, because you don't know if it's going to go and do something like this. You don't know. So, but you leave a little bit on, or you take all your profit right there and you just be happy, and you're perfectly happy with that. If you're making money from here to here every time, be happy. That's the professional move right there. Don't try and kick yourself in the butt for not getting it there and not holding until it went there. You can't predict that. You can't know it's going to do that. There's just no way. You just can't do it. But the way to mitigate that is to sell 80% of your position at this point and let 20% ride and see where it goes, and just follow the bottom ends of the candles up until it's broken, and you would have gotten all the way to about right there on that last remaining 20%. All right. Channel trading. Channel swing trading. What stock was that? That was Square. I think I was explaining that to, I don't know, somebody else. I'm not quite sure why I went and explained the whole channel deal there. Evan is right. Go into the option and scroll to the bottom. You'd see a section called the Greeks. There you go. I guess I do have Robinhood, but I barely look at that thing. 230 Square. What's that about? Right. Yeah. 230. 230 would be good. Yeah. You remind me again of Owen Wilson in Armageddon. Oh, okay. Scariest thing imaginable. Yeah. 130. That's all you had. You could have just said 230. Okay. Got it. Yeah. Is that the hour chart? No, it's not. Oh, well, maybe before when you were asking it was. And Kelly said one day. That is correct. Daily. DK, would you say you use the same delta value, 0.60 to 0.80? Motherfucker, look at this guy. He put in parentheses with the zeros and the dash, just like me. Man, I like this guy. Who is this? DK. Cool dude. I like your style. Very, very nice. Good stuff. Anyway, he says, would you say you use the same delta value, 0.60-0.80 for leaps too, even though expiration is January 2022 or 2023? Yes. And the reason why I say, but I guess let me finish reading what you said here. I was looking into getting January 2022 leaps in Open Door, but I think we're already in the middle of the channel. Kathy Woods also bought a bunch today as well. My thoughts on the leaps are you should get as much as will take you over the long-term capital gains point, which is a year. So in your case, January 2022, that's not going to do it. So I think that could be a bad idea. If you can't get anything longer than that, then okay. All right, I understand. But if you can get longer than that, you probably ought to, because why are you going to hold something potentially for 10 or 11 months and then pay 30% taxes on it, when if you could have just held it for another month, you would pay 10% taxes on it? You'll actually lose money selling it a month earlier if you just held on. You probably could even go down in value, and you would probably still have made money because of the difference between 30% and 10%. Anyway, aside from that, your question was about the delta. And oh yeah, there you go. And about getting 2023 or 2022. And I suggest you don't super overpay. After a year, you're going to want to roll. You're going to want to roll that leap. So you can do that for long-term capital gains, which is good. But you're going to want to roll it up. So if you made like a 50% gain on the stock right now, the same delta will be at a much higher strike, and so you sell the one that you own, and then you buy the one that was the equal the delta when you got in a year ago, which is today or whatever, and then it captures the difference in that you get to keep that becomes your profit, and then you have a new position, and you avoided capital gains, short-term capital gains, and you have a new position you took out your profit. And you're probably likely going to do that, and you don't really need to. You're going to want to do that. You're going to want to take your profit off the table. That's a special technique. Rolling up allows you to take out your profit on options without actually selling the option, without selling the position. It's pretty cool. Yeah, taxes and rolling mean on one respect. The taxes are the respect that's saying, hey, you should get at least a year. The rolling says, hey, don't get much more than a year. So you want to time that kind of like where you get like an option that's a year and 3 months or something like that. Yeah. Okay, dude. I hope I don't mess up question format. Blackberry is a long value investment. Can you go through the fundamentals of its growth this year? Oh, I don't think I can do that over this right now, Wu Tang. His name is Wu Tang. The fundamentals is it's highly undervalued at this point and just needs reevaluation, I think is what you were probably saying. I have looked at it, and let me take a look at my top screen for just 1 second. I'll give you a little bit of an idea of what I think. I would say it's not super duper. It's okay, but I don't think it's really worth more than $8. And that's even in the future. Maybe 16 tops. That's roughly where it's at. So I can't really give a full in-depth fundamental analysis of it right now, but that's what I see on my fundamental analysis charting system. Corsair, if you if you have a stock you want me to take a look at, let me know why. So stock ticker and why we're taking a look at it. Why are cannabis stocks struggling? Well, the thing is, if you've taken my course or if you're a VIP member, you can find a particular masterclass I chose called How Not to Lose Money. If you're in any position, any swing position, any investment, you can use those techniques and how not to lose money in order to sell when you start losing all your gains. And you don't have to ask questions, because what do they say? The market can remain irrational longer than you can remain solvent. So you can go, I don't understand what is it doing this guys? You can keep saying that until you're bankrupt in the ass. And then what are you going to do? So if things going down, just get rid of it. Who cares why? Yeah. I mean, this is about making money, right? I mean, you're not really just trying to give your money to this particular cannabis company and you're like, hey man, I don't care if you lose it. That's fine. Just, please enjoy. I don't think that's where you're at with it, right? If you're trying to make money, then who the fuck cares? If it goes down, chop it off, sell it, and take the money and don't let it go down any further. Kevin asks, I'm sure it's been asked or people want to know, but why did I think you're talking about GME go up? If you already talked about it, sorry for asking again. It's up over 100%, even after hours. Yeah, we looked at it already, Kevin. And the reason on GME for it going up is, it's a multifold. I mean, it's been talked about in Congress too. I mean, it's getting attacked on every side. But it's basically an epic short squeeze. And I think that you probably should look it up in the news. It's pretty interesting stuff. GME CEO got ousted. Oh, when did that happen? Did that happen today? Is that what triggered some of this? And then Gabriel says, but they charge taxes 10% if it is less than a month. 30%. Yeah, that is true. Where are you getting these questions? I don't see it. Is my question getting skipped? Alina, this guy Kevin keeps putting his questions as direct messages. I see them, you guys don't. Kevin, did you realize that you are making them as direct messages? And if I skipped your message, Alina, I'm sorry I didn't see it. You said, "Can you look into Tesla?" We already did that at the beginning of the session, Alina. Did you have another question? Is my question getting skipped? Can you look into Tesla? That's the only one that I see there. We already looked at it a little bit earlier. Looks good. Tesla looks good. If you have you just got in 20 minutes ago. What, on the stock market class or in Tesla? Oh, okay. Well, what was your question about Tesla? Like, what's your hope, or what do you want to validate? Want me to try to validate? Let me take a look. Do you think GMC will bring down the market like last time? I mean, GME, bringing down the market like last time? Short squeeze. There could be a little bit of that collateral effect. That's a very, very interesting concept. Yeah, that could happen. All right, everybody wants to go over SOS, but SOS just crapped out today. If you didn't sell, why? Do you like losing money? If you have SOS, you should have sold when it was going down, and preferably before it was going down. So now you want me to look at it because you hope I'm going to say, "Oh, you're all right, man. Have a beer. Just hold on for a week. It's going to be fine." No, you should have sold smartly. So let's take a look at it, and maybe I'll give you some good news. Shark is accumulating shares under 8 for SOS. Okay, well, that could be good. But I would see SOS coming back down to about 440. You lost, but average down. Yeah, SOS is dead. It's dead. It's breaking its pullbacks. It's not holding them. It's dead. Will it pop again? Yeah, probably will. But from where? You want to be out. You want to take your capital out and now be watching. And you want to watch it settle in, create a base. And if you miss it, that's okay, because you put it somewhere else that day. You made a ton of money somewhere else. What you don't want to do is be stuck there holding a depreciating asset, doing nothing with your money. Your money could be better off sitting under your pillow in your bed as cash than leaving it in something that's going down. Don't let your money go down. If it's going down, get out. You can always get back in. Like, this is the crazy thing, is people are so afraid to get out of a stock. Like, why? Because you think you're going to miss it going up? If it starts going up, get back in. It's free. It's fucking free. Like on 90% of the platforms and the brokerages, it's free now. You can just exit. And then when the thing starts going up, get back in. It's amazing. You could do that 27 times in one day, be wrong, about it going up. I think it's going up now. I'm going to get back in. And then, nope, it's not. Get out. And then, I think it's going up. I'm going to get back in. Nope, I was wrong. Get out. You can do that over and over and over and over until you're right. And it won't cost you hardly anything. So don't be afraid to sell. It's just ridiculous. People want to hold on because of one day it's going to skyrocket. In the meantime, you lost 70% of your money over 2 weeks. Just wait for it to start going up. I think it's that, you don't have the tools yet. What you want to look for is when a green candle breaks over a red candle high. Has that happened in the last 7 trading sessions on SOS? No. See that? Hasn't happened. Now, if tomorrow price can come up over 8.7, now you could enter. But you don't want to be in it now. You get out, way up here. In fact, we looked at SOS, I think yesterday, and I said, but once it became unhinged right here, it just became day tradable. You don't want to hold that overnight. And then another guy says PDT rules, pattern day trader, PDT rules. For that reason, you don't want to get in and out. But I could be talking about on a day-by-day basis as well. It's like you could be waiting for the right moment each day to decide to get in or not. So that could be on a daily basis. Yeah. Yeah, we already talked about costs. Uh, Christopher says on Robinhood, once you select the date and call you want, select on the price ranges listed below the limit price, and you can view the Greeks there. I have lost so much money holding, Sandra says. Yeah, the being a winning, profitable trader, or investor, swing trader, or trader, if you want to call it that, or day trader, either way, it's all about managing your losses. It's not about winning, it's about managing your losses. That's when you become professional. If you can work hard all the time on managing your losses, it'll change your entire profit loss, and you'll actually start to be winning, because you will win a little bit here, you will win a lot here, you will win a little bit here, you'll win a lot there. But if you're not selling at key points in which you should be selling, you're just giving it all back. You're just giving it all back every time. Can you imagine if you just got in things and stayed in the ones that went up, let them go up, and just like followed some of my rules, how not to lose money in a particular class. But if it went down once you got in, you just got out like around your break even, and then you waited to get back in another time when it was a better entry. Can you imagine how much money you would make? Because you would not be losing money. That's why. You'd be keeping your gains, but you would not be keeping your losses. You'd be cutting them before it's too late. Oh, man. And Matthew asks, how did you learn how to do all this? Oh, it's been a 25-year journey, and there's from other traders, from books, from my own hard work and research and testing and losses and mistakes, right? Because wisdom is knowing what not to do. That's what wisdom is. And, I'm just filled up with a lot of that. I know what not to do, right? It's not so much that I know what to do, it's I know what not to do. I see what you guys want to do, and I say, no, bad idea. So I know that's something you don't want to do. And you don't know that yet. And so that's, so I don't know everything, but what I do know is a shitload about what I don't want to do. And the stuff that I still do, turns out to be good stuff, right? And I avoid 10 times as much bad stuff than the good stuff. I know about, 10 or 20 winning principles, not a whole, just a couple dozen. And that's really all you need to stick with in your trading. You don't have to learn how to win in every scenario and every, in fact, it's impossible in one lifetime to learn everything about the markets in the entire world. There's too many ways to make money, too many assets and instruments, and it's impossible to learn and everything. So you have to just stick to something that you can learn in like 10 to 30 years and then stick with it and become a master of just a couple of small things. And that's it. Like channel swing trading. That's what I'm very, very good at that. And I've taught some of the members in this group how to do that. And my course teaches that. And that's one of the things I'm best at. But I also couple that with some good fundamental analysis. So put it all together. Price action. Yes. Reading charts is just everything. Can you imagine just being a news trader? I don't know how anybody can do it, but so many people, that's what they do. They think that, they don't know how to read charts, so they think, okay, well, I can understand news. But the thing is, the stocks don't always do what you think the news is going to make them do. And so you get yourself in trouble. And there's a lot of methods using chart analysis for you to confirm a high probability entry, right? Like we look here, I don't know if it's mid price right now. I don't know if SOS is going to go up or going to go down because it's basically mid move. It went, if I could just draw that, I'm using my hands, but if I can just draw that, look, it went up here and now it's all the way back, essentially halfway. So I don't know if it's going to go up halfway and then come down and test it and then break down. That's a possibility. Or I don't know if it's going to continue to go down now and potentially even come back up. And you don't know. It's right in the middle. But if it was up here and it was starting to turn red like it did, I could tell you, oh, hey, you know what? You should sell. You should get out. That much I know. You get out up here when it started to come down because that's at least currently for the moment the end of the move. If I'm wrong and it goes up and it breaks that red candle high again, you get back in and you be wrong and you start making more money again. But if you're right, then that's the end of the move. Now you go over to like Crocs, any stock, Target, ARCs, any stock that has a nice channel going on. But I'll pull up Crocs. And my point is, you do know where that's going to go with a higher probability. It's not for certain. Nothing is. But when it's this certain, look, the price has just been hugging the 20 moving average, that's this yellow line, for the entire year. And anytime it pulled below the 20, it tended to bounce off the 50. That seems to be the latest range for it. So, you either take it off of the 20 now, but if it falls back, you double down at the 50, or you take it off of the 20, or you wait until the 50 and you get in there, and that sets you up for a high probability channel trade. That's a lot better. That's a lot better than guessing on the direction of like Palantir or something. Or news, the hype of news. All right, listen, let's take a look at tomorrow's hot stocks. They could be after hours winners tonight. And let's take a look. Well, yeah, we have GME costs and then SCKT, socket, and of course AMEC is up there. But we're going to absolutely make sure that GME costs, EXPR, BB, Nokia, AMC are going to be up on our radar tomorrow. Even though many of them are low floats, we'll be watching them. See, the problem with low floats when you want to make money on them on breakouts is they don't move very much. They move like 2 cents, 5 cents. They just don't move. They don't do what GME did, which is right. All right. So anyway, let's take a look at the chart on not Crocs, but SCKT. All right, so in after hours, it popped way up to 15 from about 10, so about a 50% increase. But the problem was it came back down almost 80%. Came back almost 80% down. And this was, I guess, when the conference call started after the earnings were reported. And then it moved up only, a small part of that. It didn't push all the way and break a new high. It wasn't that bullish. And it pulled back just a little bit and then broke that high again. So it's like semi-bullish when it can do that, and went back to about a total of 30% retrace off the highs. So it had a weak moment going into the conference call, but after the conference call, things looked on the up and up, but not quite as bullish as they had felt on the beginning. It makes sense, right? You can read it in the chart. I'm just translating to you the logic and the psychology of what we're actually looking at. Now, tomorrow in the pre-market, what we would hope to see is for it to pull back and hold some pullbacks and then break that high right there, that pivot high, push and break the pre-market, this tonight's high, the after hours high, and do that a little more, maybe open around 17. No, that's not necessarily an ABCD, but you can I see what you mean. Yeah, you can kind of think of that as an ABCD. A lot of these moves, can be similar to each other because there's not a lot that price can do. In a trend, it tends to be the same. So, but yeah, I see what you see there. And in fact, if you look, I thought that was interesting that GME today went through multiple ABCD cycles. Did anybody notice that? Here, let's take a look at that again. GME, because I found that kind of fascinating. I'm going to live stream tomorrow, yes, but today was free. Tomorrow, Friday, Saturday, Monday, and Tuesday will have to be part of a 7-day free trial that you'll sign up for. So hopefully you liked what we did today and you want to do that for 4 days straight. That's the point of free Wednesdays. Okay, now look at this, Gabriel. I think you bring up a very interesting point. So when we started this around 48, that is what we were seeing. We were seeing that ABCD pattern. A, B, holding the VWAP, C, ranging, breakout of C, then breakout of A to D, right? And then if you start to look at it, at a certain point, it does that again. There it is. See that? Now you could think of this as a huge A. So when you spot these, they can be pretty lucrative. So look at that. Now this is a huge A, all the way up to 200, pulled back. It's well above VWAP, so that's excellent. Pulled back less than 50%. Created its first break of what you might have thought was C, but it's really not C because C needs to be a bit closer to C is probably right here, 160. Okay. And then breaks C and runs all the way up to 190. So you could have got that. And, it could have went further, D, all the way out, breaking A. But that's why you take profits. That's why you double up on the break of C, and then you take profits about halfway between A and C, because you don't know. You just don't know how far it's going to go, if it's going to complete the D journey or not. So that was really, really something there. Good point there, Gabe. Let's see. Also, yep, workhorse a lot in after hours. Let's take a look at the shape on that. Oh, wow. That's really good. 15 to almost 18, pull back, and then push back all the way to the close of the market. That's a good bullish sign. So we'll be taking a look at workhorse in the morning. Let's see what else has a lot of volume in the aftermarket. Yeah, Blackberry with almost a 10% gain. Let's take a quick look at that. Oh yeah, actually that's a very good pattern. It's holding the pullbacks, making basically higher highs and higher lows, pushing through a bit of an ABCD pattern. So we'll check that out in the morning as well. Let's see if there's anything else on the radar. SYPR. We traded that, I think, at the open. No, that really didn't put anything good in the after hours. I'm sure some of you are bag holding SYPR and you're like, oh yeah, SYPR, yeah. Tell me. Yeah, no, it looks like shit. You should have got out. All right, guys, that's going to be it for class tonight, and I'll see you in the morning. Pre-market about 30 minutes before the market opens. That will be free and open for you to join us. So you guys have a good night. Take care. You bet. Appreciate you guys. Bye-bye. Have a good night. Big day tomorrow. Big day every day. Every day is a bigger and better day. Kind of was a boring day in the midday and sideways at the beginning, but it really perked up in the last 2 hours, didn't it? All right. Have a good night, everybody. Thank you very much, Sergio. Appreciate that.